Getting the shares out, guys, and we'll get going. What a crazy day. Hope everybody's doing good. Take my hand. Oh no. I made a big mess. Alright, I need more gamer subs. I am out of gamer subs. Gotta call Mr. Cody. We ain't doomed. We're just waiting. Good morning and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today, we're going to be talking a little bit more about the sell short squeeze, specifically Celsius and what's going on with that. I posted a video last night around midnight covering, of course, the details. So if you're interested in that, make sure you go check out that video because it's very important that you understand all the dynamics at play here. We just have some updated news surrounding downtime on FTX and how that's kind of impacting it and seeing that if that short squeeze is going to recover, that sort of thing. Then we're going to be talking about Bitcoin miners and GPU miners flooding the market with hardware. Obviously, with the decrease in the price of cryptocurrency and the increase in the cost of electricity, this is going to be a thing. Then we have a lot of Ergo news. We have EIP 27 coming out today. We have fixes going into place at GetBlock for their downtime over the weekend. And that is pretty much it. So lots of fun stuff to talk about. Oh yes, and the first Bitcoin short ever has been placed on New York Stock Exchange. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, welcome back, everybody. I try to keep up with the crypto news as best as possible, obviously with a focus on mining first. And today we have the EIP 27 for Ergo on their mainnet. It should go live. Let's go ahead and get the full details for you. This will be a re-emissions contract that's going on. Let me get this fixed real quick. Boom. Bam. As announced on their Twitter yesterday, less than 24 hours until EIP 27 activation on Ergo mainnet. We talked a little bit about this yesterday. EIP 27 is a re-emission soft fork voted in favor by a supermajority of 90% or more miners of hash power to extend the Ergo emission schedule by 17.38 years to the year 2045. You can get the full details on this link, which we have pulled up for you guys. And here you go. As a proof of work blockchain, Ergo has defined emission schedule for the release of Ergo tokens. When Ergo launched in 2019, there was no ICO, no pre-mine, and no pre-allocation of tokens. to any founders or venture capitalists. Once the mainnet was activated, Ergo's emission schedule was set to be completed within 8 years with a strict supply of 97,739,925 ERG. During the first 2.5 years, the emission schedule sent a small portion of each block to the Ergo Foundation treasury for the purpose of funding promotion and development on Ergo. After 2.5 years, the Ergo Foundation ceased to receive any rewards from the mining protocol and will have received 4.43% of the total ERG supply to fund that entity's initiatives. So yes, they did have a foundation, and yes, they do have, I guess, what you would qualify as a dev fee that was built in early on in the emissions. Some people don't like this. I can understand why. I will say that the way they did it early on in the project and the way they have almost 5% of it kind of incentivizes them to hold on to it and to basically keep working on the project because they want it to succeed. So there is that as a positive note surrounding it. But in general, dev fees can be a very controversial subject in this particular setup, but we covered that in our WTF is, so you can check that out. Ergo currently mines blocks every 2 minutes. For the last 2 years, each block was set to release 75 ERG into circulation. At the end of the second year, the emission rate was set to drop by 3 ERG per block, with a schedule that would see block rewards further reduced by 3 ERG every 3 months. After 8 years, the total supply of ERG would have been completely mined, and the mining protocol would be reliant on transaction fees and storage rent to reward miners. Recently, the Ergo Foundation undertook the initiative to ensure the long-term sustainability of the mining protocol by proposing an amendment to the emission schedule. As the blockchain is still in its early stages of focusing on promotion and development, there was a concern that the ecosystem may need more time before the end of the 8-year emission schedule. If there are not enough dApps and users in the ecosystem at the end of the original emissions schedule, there may not be enough transactions to incentivize miners to maintain the network. Obviously, then the network would lose security. We've talked about this a lot, but this is straight from the horse's mouth, which is good. Ergo's co-founder, Alex, proposed a solution to this possible scenario. The proposal, EIP27, would see Ergo emissions extended by approximately 17.38 years, thereby offering the time to develop the necessary crypto economic security for the blockchain. The plan alters the amount of block rewards so that a portion of the supply can be put into a re-emission contract that will release block rewards until approximately 2045. On Ergo, miners enjoy the ability to suggest and vote proposed changes to the network. With EIP27, the proposal required a 90% pass vote in order to be scheduled for implementation. The mining community voted over 90% in favor of this proposal after a successful testnet implementation. The new emission schedule is slated for deployment with block 777,217. He provided the following breakdown of the re-emission in EIP27 update on an Ergo forum post. Quote, if block reward is not less than 15 ERG, send 12 ERG from it to the re-emission contract. Otherwise, block reward R is less than 15 ERG, send 3 ERG from it to the re-emission contract. These new emission rules will be integrated with the original emission schedule of the white paper. Currently, block rewards are reduced every 3 months by 3 ERG per block. This will still be the case after EIP27 is activated. However, once implemented, approximately June 12th, the block size will be 51 ERG per block. Based on the original emission schedule, the next reduction in rewards will take place around July 2nd, 2022, and the block rewards will reduce by 3 ERG. Therefore, the total reward for each block will be 48 ERG. 3 months from that date, the block reward will be 45 ERG per block, and so on. The reduction schedule will continue until block rewards are 3 ERG per block. Block rewards will remain steady at 3 ERG per block until the re-emission contract has been depleted. EIP27 is a commitment to ensuring long-term and sustained growth on the Ergo platform. Since changes in the emission schedule cannot be implemented without consensus without the mining community, EIP27 represents the collaborative spirit of the Ergo community to collectively build a better blockchain for everyone. For more details on the implementation, you can check out his forum post, which we have done on this channel. So you can go check that out as well. I think the big note here is that you will be seeing a reduction of the reward by 12 Ergo per block here today. And then from there, we will see a reduction on July 2nd to 48 ERG per block. And then subsequently every 3 months from there until it's down to 3 ERG per block. It should be interesting to see how the price reacts, of course, on Ergo. We won't really get a great idea, but we will be checking it, of course, across the week as that goes through and goes into place and see how the networks are reacting. One of the big points that I wanted to bring up here too is that from the perspective of the miners, Ergo is making sure that 90% of the miners are okay with this. Now, traditionally, a big problem with miners voting also is that it's really the mining pools voting and not the miners themselves or individual miners. A pool called getblock.io, which is the pool that I'm mining on, not only has basically pioneered smart pools along with a lot of other stuff, but they also early on pioneered a way that individual miners could vote in a sort of interesting fashion on the EIP themselves. Of course, the pool itself, GetBlock, basically took all the votes from the miners that were on GetBlock and then voted in the manner that those miners voted. So it's not a direct individual miner vote to Ergo themselves, but it is basically allowing individual miners to have a say. I support that because I think that is an awesome way to handle it. So I support GetBlock from that perspective. Anything that supports the miners, supports us, the individual miners as a whole is what I lean towards. There's no sponsorship here. There's nothing as far as nefarious. I'm not paid or sponsored by either Ergo or GetBlock at this point. These are just my perceptions as a miner myself, and I appreciate the way that it was handled. Price discovery with the cut down in, of course, the block reward is going to be important. Profitability still remains king, of course. Revenue remains king, especially in these trying times with the bear market and the crypto winter. So we'll have to see where it shakes out. And we do have some more announcements from GetBlock coming up here regarding the downtime they had this weekend. But before we get into that, the GPU flood is here. Crypto miners are dismantling entire systems, selling graphics cards at dirt cheap prices during live stream auctions. And this is apparently primarily Chinese miners, which is interesting. The recent crypto mining GPU crash has prompted several Chinese miners to dismantle their entire systems and sell off large quantities of graphics cards during live stream auctions. Chinese GPU miners and e-cafes were amongst some of the large-scale purchasers of graphics cards from AMD and NVIDIA. These graphics cards were used to mine Ethereum, which offered lucrative profits to the operations during the crypto craze. But ever since the decline of Bitcoin and ETH, the crypto market, these miners are now forced to sell the same graphics cards at cheap rates. Here's some pictures from the live stream. I'm not sure how you get in on this necessarily. So if you find out, let me know and I'll let you guys know, but I don't know at this time. Pictured from such e-cafes and crypto operations can be seen online in various Chinese forums such as Baidu. Users are posting, so there's, I guess, one place you could track it down. Users are posting pictures of hundreds of graphics cards, which were previously running crypto mining, now sitting on floors and desks, waiting for users to buy them off. With the ever-dropping prices of graphics cards, these miners are now forced to sell their GPUs on various online auction sites, and some have even resorted to live streams on popular social sites. Some of the most popular graphics cards, such as the 3060 Ti, are now being sold for around $300 to $350 US on reseller sites. The same graphics cards being sold for over $700 to $800 in the US a few months ago. While these are dirt cheap rates compared to where we were a few months ago, these graphics cards have been abused in mining for over a year, and we won't recommend getting these cards, even if they are being sold under MSRP. Despite our caution, we know that gamers would find the used graphics cards as great deals and still buy these overly used graphics cards. There are at least $15 billion worth of GPUs sold in the mining segment alone since 2021. Now, as far as buying these used graphics cards from crypto miners, I have been working on a video for this to give you guys a few ideas of things to look out for, but examples of things to look out for would be any copper modding, because any additional pressure on the PCB would not be warranted. And pretty much if you are on the 3000 series, you want to be careful because the fans are running over 80% in most cases on those, which means you may have fan replacement things that you want to get into. And then on the 5000 series RX cards from AMD, those typically run pretty high fan speeds as well. However, if you're looking at older GPUs, 20 series and older, as well as like Polaris GPUs, which will probably be extremely dirt cheap this go around, they shouldn't have as much of a problem because they are running much lower fan speeds. And other than cleaning out dust, replacing thermal paste and thermal pads, there really shouldn't be much you need to do to fully refurb these cards. And buying them at cheap MSRP or cheaper, way cheaper than MSRP is probably still beneficial and worth it. So I disagree with WCCF Tech here. And I know I'm a miner, so I know gamers probably won't listen to me, but hey, like, it's going to be cheaper. Also, if you're looking at expanding your operation, now is the opportunity to which you would be able to do that. If you are a crypto miner, that being said, to be clear, that's not financial advice, but these are the opportunities I look for personally when we're in a bear market, right? So that's where I sit. The other thing is that with such a huge flood of GPUs entering the market right now, it means that NVIDIA and AMD will have a hard time selling off cards based on their existing GPU lineup and would take time to get rid of their excess inventory. Now, how this affects gamers is that while they will be able to get cheap and used graphics cards for now, we'll have to wait till the big next generation release of GPUs. With that said, Ethereum proof of stake is expected in the second half of this year, which means that GPUs will no longer be useful for mining purposes. Except GPUs will be able to be used in plenty of other algorithms and other coins, such as Ergo, Ravencoin, Flux, and many, many more, along with speculative mining, because as we know, a lot of projects start off with, of course, that in mind, right? They start off with the distribution method of proof of stake, and I'm getting in here to get a ban. 1 second. Bam. Nope, did that work? Undo. Nope, that was correct. I don't know where my moderators are. All right, we got them. Bobby Jones banned for spamming, trying to get you to buy really dumb stuff. Don't do it. For those that are watching later in the live chat, we had a spammer come in trying to sell us some XDC, which is not a good idea. Don't do that. So this means that miners have a few months left to profit off their GPUs with the ever-decreasing crypto rate. It looks like miners are giving up on GPU mining and selling their cards to get as much as they can off of them. It won't be much since these cards were bought at 2 to 3 times their MSRP during the crypto craze, but miners have already reaped their profits from the whole situation. The ones bought in China probably weren't at like 2 to 3 times the rate, to be completely honest. And in addition to that, a lot of miners have been purchasing beforehand. So not necessarily true across the board. It is true to a certain extent. It depends on how many people were still expanding, etc. I know like my average cost of a 3090 was about $1,800. So there is that, but you know, it's not $3,000 or $4,000 like we saw at the height, right? And we see more Bitcoin ASIC miners being sold off as well, as expected. And this is coming from Bitfarms on CoinDesk. Miner Bitfarms sold almost half its Bitcoin to reduce debt. The miner sold 3,000 Bitcoin in the past week to improve liquidity and reduce indebtedness. Sorry, they're selling off their Bitcoin. Still very relevant though. So Bitcoin miners Bitfarms sold almost half of its stash of the cryptocurrency in the past week for about $62 million to reduce debt as miners feel the squeeze of the crypto market downturn. Bitfarms is adjusting its holding strategy to improve liquidity and strengthen its balance sheet, according to Tuesday press release that played on a mistype of the word hold. The sale of 3,000 Bitcoin cuts the miner's holdings to 3,349, including month-to-month or month-to-date production. Excuse me, guys. There we go. So Bitfarms, based in Toronto, also closed a $37 million equipment financing deal with NYDIG, announced last week, bringing liquidity to $100 million. The money raised in the sale helped the miner reduce a Bitcoin-backed credit facility from Galaxy Digital to $38 million. Last week, Bitfarms said it had sold 1,500 Bitcoin to reduce the rolling loan to $66 million from $100 million. A slouching Bitcoin price has spurred miners' profit margins to dwindle after many of the miners borrowed heavily to fund their operations. Bitfarms was one of the miners with the strategy of keeping its daily Bitcoin production on its balance sheet, using lending and share offerings to fund expansion and day-to-day costs. Asked about selling Bitcoin to improve cash flow or minimize stock dilution, Chief Mining Officer Ben Gagnon, something like that, said in an interview published on April 22nd that Bitfarms' at-the-market offering and borrowing against its Bitcoin holdings were alternative options. Quote, "We think that Bitcoin is currently undervalued." Do you guys remember, like, even at the height of this, I was saying, like, don't borrow. Like, even if we're, like, borrowing against Bitcoin, you still have to pay that back. It's not a good idea. We don't hodl Bitcoin. We hodl what? Silicon. Look, you can still be a miner and participate within cryptocurrency and not have to hodl and still be supporting the network. And your goal is to maintain security for the networks. You should be aware that this happens every single time. It is absolutely insane to me that these massive companies are going against very basic principles for operating a business that puts them in a position where now they have to liquidate at low prices of Bitcoin to pay off their debt. Whereas if they would have just sold the Bitcoin at the top instead of borrowing against it and purchased more hardware, they would be in a much better position. It is absolutely baffling to me how poorly these companies are being managed, especially given the clear signals from the halving cycle that are completely obvious to a dummy like me. I don't get it. It's absolutely infuriating. We think that Bitcoin is currently undervalued and the long-term, medium-term potential of Bitcoin is significantly greater than the cost of capital to borrow against cryptocurrency, he said in April. At the time, Bitcoin was about double today's price. While we remain bullish on long-term Bitcoin price appreciation, this strategic change enables us to focus our top priorities of maintaining our world-class mining operations and continuing to grow business in anticipation of improving mining economics, Chief Financial Officer Jeff Lucas said in Tuesday's statement. Bitfarms shares rose 6.8% on the NASDAQ. Man, if you guys need some consulting, let me know, because this is just crazy that you just missed this entire boat. It's absolutely silly. Let's talk about Celsius some more. So, as you guys may or may not know, Celsius has shut down swaps, all that sort of stuff. I think at this point, if you've been watching the channel, you're completely aware of it. We talk about not wanting to be a part of CeFi, not wanting to be a part of centralized exchange, not your keys, not your crypto. Okay, all that out of the way. What is happening is that Cell, for funding, create a token, an ERC20 token, on the Ethereum blockchain. And as of right now, about 87% of it is locked up in Celsius itself, meaning that you can't withdraw it. Another 13% is out in the wild, right? It's in other centralized exchanges. It's on DeFi with Uniswap and 1inch. And there are a couple of different ways to purchase it all. Community movement has started that we covered in complete detail this morning, depending on your time, or late last night, where a short is going on. And this is kind of the details and the case for it. We did read this and cover this article. I'll just cover a little bit of it really quickly here. So shorts borrowed approximately 18 million Cell tokens on FTX, sold them into the market on FTX and other exchanges, and the Cell token price crashed to 20 cents. Now the shorts have to buy back the Cell tokens. However, if the price continues to rise, they must be careful not to do so at a loss. Short put an order in FTX to buy 37 million Cell at 1 penny, in apparent bet that Celsius network will fail. As of writing, which was yesterday, 11,297,429 seller available on exchange and wallets. And exchange wallets and shorts have to buy back 4.6 million sell tokens on FTX. So you would really want to, if this wants to work, you'd want another, 6 to 7 million in wallet or out of the wallets, right? Out of the exchange wallets. So the action plan at your own risk, not financial advice. Buy, sell on exchanges like FTX and transfer the sell to private wallets or set limits, orders on 1 inch for $100 each. And this is the short squeeze. So a short squeeze is going on right now. Not dissimilar for those that are familiar with GameStonks and AMC, that sort of idea where there's a clear short selling going on. The supply isn't really enough to cover all of it. And so if people decide that they want to go ahead and short it, it is technically feasible. I don't know if it'll actually happen. And then, of course, directly after I made the video, interestingly enough, at 1:55 a.m. last night, so 2 hours after about, FTX says Cloudflare is experiencing an outage, and so FTX and many other sites are going to be hard to access for many users, which was pretty hilarious because if you looked at the kind of the price of it going up, it went up until those came into play, and then it kind of went back down, right? So these outages, I was like, man, I don't really believe the outages, right? We're just going to say that Cloudflare is experiencing an outage. So I did look it up, and TechCrunch did report and say that a Cloudflare outage on Tuesday knocked out numerous popular websites, including major crypto exchanges FTX, Bitfinex, and OKX, raising questions about the security of centralized crypto platforms. Obviously, we're always going to be worried about the security of centralized platforms, right? But security in crypto in general, all Cloudflare is, and this is kind of like, because I used to utilize Cloudflare a lot. All Cloudflare is a DNS provider, right? So all it does is take whatever you type in the top address bar and translate that into a public server IP address and then present you with the website. So it's kind of weird that it would just completely take it offline, in my opinion. But let's see what the site has to say. The CEO of OKX, which saw 1.47 billion in trading volume in the past 24 hours, tweeted asking for a Web3 alternative in the future after the company's website was hit by Cloudflare services issues. Now, as far as like Web3 solving this and so on, technically, Cloudflare has been participating in Web3 versions of this, and it's called IPFS. This has been around for quite a few years now. There are other Web3 options, yes. There are, unstoppable domains, stuff like that. But to say that that integration is not available in Cloudflare, or that particular method isn't available in Cloudflare, again, then coming from the CEO, is quite crazy, and I would be more worried about the technical savviness of the team at OKX than I would be with them moving to Web3 alternatives, okay? There are alternatives within Cloudflare that could probably help here, is what I'm saying. FTX, the world's second largest crypto exchange, briefly went into post-only trading mode when it became inaccessible during the outage, the firm tweeted. The mode ensures an order to be placed only if it's an order by a maker, which is someone who sets a price to buy or sell. And that is interesting. So not only did FTX have a post-only trading mode, okay, so it did maintain the post-only trading mode. Got it, okay. Block Explorer, Etherscan, and crypto exchange Bitfinex also tweeted about their website being unavailable. Many services affected by the Cloudflare incident were back online within 2 hours. The scale of losses caused by the outage is still unclear, but advocates of decentralization have long warned of the risk of keeping one's funds on centralized crypto exchanges. Now, we've talked about this before. This isn't just a DNS, right? Okay, is not just a problem for centralized exchanges. Believe me, I'm the first that would love to bash on centralized exchanges at every turn I can take, but this is not one that you can do that, because from a technical perspective, a lot of your DeFi websites are utilizing traditional DNS. It all uses the same technology. This is just the growing pains of decentralization to a certain extent, right? We talked about this before with the downtime of QuickSwap, right? What were they using? Well, they weren't even using Cloudflare. They were using GoDaddy, but it's traditional DNS. They moved to Cloudflare and implemented the services on Cloudflare that I'm referring to. So, this isn't a centralized exchange problem. This is just a DNS problem. So it's very disappointing that TechCrunch would even try to push this whole narrative of centralized crypto exchanges being the problem here, when that's not really what the problem is here. Okay. It's very frustrating, which act as escrows for customers and tout their more user-friendly features. They are more akin to traditional banks or asset exchanges, which are regulated in the jurisdictions they are permitted to operate. While centralized exchanges are held accountable by regulators, some argue that they are more susceptible to hacks because they are responsible for large volumes of trades and store most of them on their own servers. On the other hand, users who conduct peer-to-peer transactions automated by smart contracts are supposed to be at reduced security risk, because even when the decentralized exchange is hacked, the funds are in users' self-custodian wallets. And that's fair, but when we're talking about just websites going down from DNS, it doesn't really have anything to do with a hacker getting into the servers, right? So Cloudflare having issues with the service, right, is not the same as a hacker getting into the physical servers of the service. And so this move to basically try to take the argument that Cloudflare services being, causing service interruptions for centralized exchanges automatically means that we should be worried about hackers on the centralized exchanges doesn't make any sense. And I would really highly recommend that you guys, especially TechCrunch here, that you do some more research, Rita. All right, Rita? This is a very poorly written article, because now you're just misleading people. I would love to join your side in the crusade against centralized exchanges, but logically you make no sense here, and it's a completely off base article. You get, you're not going to convince anybody, because any IT guy that reads this is going to think you're a dummy. All right? Because I think you're a dummy. All right, we're done. So, how's the short squeeze going, right? It's not going so well. I mean, it's still going well. It's fine. We do have FTX pulled up here. It's at $1.10, which isn't like what its high was, which I believe was 140 or something crazy last night, right before FTX went offline, which is funny. But as of right now, it's at $1.11. It's up 32%, right? It was top 100. It's down to 105 now. Its volume is up 130%. And then I believe you can see it here. The top was $1.54 at 3:04 a.m. And I don't know if this is Central Time or what, because I think at 1:55 a.m., which must have been 2:55 a.m. So yeah, pretty much right as it hit the top at 1:51, Cloudflare magically had service issues on major exchanges, FTX and OKX and Bitfinex. So then my question is, do all three of these exchanges list Celsius? Now, obviously, we can't prove anything here, and there's probably a lot going on, but it is an interesting question to ask. I'm not sure that they do. Okay, so OKX does, Bitfinex does, FTX does. So magically, DNS, which basically is just an address book for the internet, has service interruptions for the three major exchanges. For the three major exchanges that Celsius is listed on. So let me repeat that. Because, look, I have a lot of clients that I've put onto Cloudflare. I'm on Cloudflare. I did not experience any outages. I'm not sure what they're doing wrong. So the coincidence is scary and creepy, right? The three major exchanges that list Celsius have service interruptions at the top of the short squeeze, okay? Which is already questionable, right? And then you're saying that a massive giant like Cloudflare had an outage that primarily affected those three, but a whole bunch of other services remained. And those companies also had no backups to really go ahead and prevent this from happening. It took them 2 hours to get back online for DNS resolution. Okay. They aren't utilizing IPFS. They're not doing any of these things that you would expect a major exchange to have put in place. It's very weird. I don't have any proof of anything. I'm just saying, like, if we look at it, it's weird. I don't know. But the short squeeze is continuing. It's just much weaker. And it was weakened, obviously, by being offline for a couple hours. Because by the time you got into it past that, boom, what are you going to do? So let's talk about more shorts, though, going into place. The first short Bitcoin ETF to list on New York Stock Exchange. The exchange-traded fund will allow investors to hedge their Bitcoin exposure, which may prove particularly pertinent given the sharp downturn in crypto markets as of late. Do not short crypto right now. This is so crazy to me. We have the same halving cycle every single time. We can be fairly certain about what's happening. And we're near the bottom of the market. Sure, I know a lot of people want to say that it's going to go a lot further, but you're not hedging it on any previous knowledge of the way the halving cycle works. You're just so before you're purchasing cryptocurrency hoping it's going to go up when historically it's gone down. And now you're going to short Bitcoin and crypto during basically a period where the next step is that we go up in price. You got it all backwards, guys. Dear Lord. Investment product provider ProShares is set to list the US's first exchange-traded fund, allowing investors to bet against the price of Bitcoin. The ProShares short Bitcoin strategy, BITI, which is designed to deliver the inverse of Bitcoin's performance, will start trading on the New York Stock Exchange Tuesday. The ETF will allow investors to hedge their Bitcoin exposure, which may prove particularly pertinent given the sharp downturn in crypto markets as of late. ProShares was the first firm to list a Bitcoin futures ETF in October, a factor which saw the world's largest crypto hit an all-time high of around 68,900 in subsequent weeks. Bitcoin investors will be hoping the list of a short Bitcoin futures ETF does not have similar effect on the world's largest crypto in reverse. So they release a futures at the top of the market and they release a short at the bottom of the market. I mean, I don't know that this is the bottom, but this sure feels like if they're going to go ahead and release this and their timing of the futures was at the top of the market, right? Then this would be a bigger signal to me that this is a bottom of the market than it is anything else. I'm just saying, if this is their track record. Bitcoin's price dropped below 20,000 for the first time since December 20th on June 18th, falling as low as 17,800 the following day. ProShares applied to list BITI in early April, around the same time as leveraged ETF provider Direxion filed to list a similar product. As yet, there have been no updates on the status of Direxion's application. A short Bitcoin ETF is also already listed on the Toronto Stock Exchange by Horizons ETFs. I think once we start seeing shorts like this being listed, once we start seeing everything that is happening, once again, I'm just going to say it, everything that is happening has happened in similar fashion. in previous halving cycles. There's nothing new under the sun. All of this is just signals that we're right where we're supposed to be. So sit down, buckle up, Buttercup, and let's ride this out, because it does mean that we should see, obviously, the same halving cycle take place. Not financial advice, just basically how I'm looking at it. Now, interestingly enough, Dogecoin's gone up in price thanks to Elon Musk once again. So there you go. We're up 13% to almost 7 cents, with a stark increase in price over here. It's on a weekly high, still down over the month. I think the high was almost 9 cents. I just thought it was interesting that apparently Elon can just talk about Dogecoin and it goes up. Be careful with those influencers, boys. Be careful with them. Be careful, careful, careful. All right, including myself. Be careful with me. All right, so here's the deal. I've been mining Neta, and that is on getblock.io. There's a guide to do it if you would like to. And before we get into the details, let's run this ad one more time, because we got to run it twice. And then we'll get into this. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. I like this one. Dark Wonder says the graph looks elongated. Elongated for the Dogecoin price. So I wanted to bring that up. I thought that was funny. Good one, man. All right. So here's my mining profits. We are 8,050 Neta. So let me get that pulled up for you guys. For the past 24 hours with the 2750 Neta balance, unconfirmed balance. The reason this is happening, it's going to look inflated. For those of you that were mining on the Ergo Smart Pool, even to those that have hopped off now, basically, Get Block was 80 blocks behind. Okay? So what you're going to start seeing is if you've gotten off of it and then you're like, oh, that sucked, I wasn't making anything, go back to the pool and see if you're getting paid out. Now, I haven't checked with them on if you need to remain connected or what, as far as all of that goes. But it's important to like kind of understand where we're at, right? Let me get Neta pulled up here. Let's get our mining profitability for the 24 hours, because you're basically going to be getting caught up on payments. So if we have basically, let me get a calculator out. We have 8,050 for the paid out already, right? Plus the 2,750 that's unconfirmed. That should go into there as well. We'll have a payout of 10,800 Neta. So then we can go to our Ergo Dex and we can just type in 10,800 and we can hit just hit Ergo here. We're going to get a payout for $75.73 for the past 24 hours, but that's getting caught up, right? So it's not necessarily the profitability is good. We're going to be tracking this. It is a very difficult one to track. As you guys can see, we're having to use different tools than we would normally use, but we're getting a much more true, accurate profitability on this than we would if we did use like just what to mine. So I think it's important to show you guys exactly what's going on there. Yeah, and so MMO Star says still getting paid out 2 days after moving off. That's because Saturday it was down all day. They're 80 blocks behind, and they were trying to figure out how to, because if they're processing a block, a current block, right? How are they going to catch up on processing more blocks? Well, they did figure it out. So here's what they did. Okay, this is why you're going to start seeing a more inflow per block now. 5 blocks are going to be processed until they process all the 80 blocks they're behind on. So they say, attention get block miners. We have successfully implemented a fix that will allow for 5 blocks to process in one transaction. This will allow us to catch up rapidly on block payouts. We truly appreciate everyone's patience as we work through the issues. So if you're mining get block after we did the video and then you were not getting any payouts, this is what was happening, okay? Go back, check and make sure that you get everything. They're not caught up yet. Once they're caught up, we'll report on it on the Mining Morning Show. Remind you guys to go check your wallet again. Say, okay, now at this point, if you're not mining anymore, all the blocks are caught up, and that's what you actually profited, okay? Or made in revenue. All right. So we do have Twisted Blockchain with a super chat. We're not quite the questions. I'm going to copy this out. Twisted, thank you for the $20 super chat. Let me paste that out so I can follow that for you guys. All right. So what to mine? And we got the 3090 pulled up here. Corrected hash rates, 10 cents a kilowatt hour. Sarah's in first at $2 in revenue with $1.21 a day in profit. Ravencoin at $1.80 a day in revenue, $1.01 a day in profit. Xano $1.79 a day in revenue, $1 in profit. Ethereum $1.78 a day in revenue, $1.01 a day in profit after power. Conflux $1.63 a day in revenue and 84 cents a day in revenue after power, in profit after power. Ethereum Classic $1.53 a day in revenue and 76 cents a day in profit or after power. Z Classic $1.43 a day and 73 cents a day after power. Flux $1.41 a day in revenue, 71 cents a day after power. Firo $1.34 a day in revenue, 60 cents a day after power. Ergo $1.27 a day in revenue and 64 cents a day after power. And this is going to be changing because I believe they still have the 63 erg in the payout. Is that correct? Yeah. So that's going to be changing today on Ergo. Ergo will probably go down unless there's some price discovery on it. Okay. Mining pools. All right. The stats. What's the hash rate for Bitcoin at? Down from 222 exahash a second yesterday to 217 exahash a second. Hey, everyone, guess what we're seeing? We're seeing exactly what we expect. Price of Bitcoin to go down, hash rate to follow. This is good news. I understand a lot of people, this is a scary time, but I'm telling you, this is good news. This means the halving cycle is in place. We're feeling good, okay? We're feeling good. All right? Don't get scared. Just get prepared. This is where we're at. This is the time we are living in. This is the moment we must accept. And this is the way it's going to be. Hash rate on Ethereum, 948 terahash a second. Somebody asked me this too the other day. What is the difference between this hash rate and this hash rate? Okay. This hash rate is the hash rate that's on the pools. This hash rate is total network hash rate, meaning that 3 terahash or so, right? 951 minus 948 is just someone mining to their own node or that is not on a pool. Okay. So that's what this hash rate is. That would be basically the difference between maybe like some people that are solo mining on their own nodes, right? So you got about 3 terahash of people mining solo on their own nodes or some pool that's not been listed on here, right? So that's kind of what that is. Ethereum Classic is seeing a little bit of an uptick to 24 terahash a second. I believe it was at 23 terahash a second yesterday. Let's take a look at Ergo. And I'm betting we're going to see a huge, yep, there it is right there. A huge increase in the difficulty on Ergo, which is bringing that profitability down. And inversely, a huge decrease in the hash rate on the network. We've talked about this before. Ergo has a delay that's going on with their difficulty. And it causes these weird charts to happen here. And it causes the profitability to be extremely difficult to basically predict. And so you're in a weird position now where you have low hash rate, high difficulty. Then it's going to recorrect. It's going to come back down, and then it's going to be high hash rate, low difficulty. And it just ends up kind of making a mess. I hope that they get that figured out. I wish that there would have been like an announcement for a change or a fix on that. Let's take a look at Ravencoin. Ravencoin's at 2.56 terahash a second. Let's take a look at Cero, because I think a lot of people were moving over there. Nope, it's back down. It had a huge spike in difficulty as people were basically watching what to mine too closely and not calculating it out properly. It also has a very significant problem of 81% of the hash rate being on a single mining pool. Probably avoid that like the plague. And Flux is at 1.33 mega solutions a second, no real change, and a nice low difficulty. So Flux isn't looking too bad. All right. Mining pool profitability on Ethereum. Last 90 days, Ether mine in first, F2 pool in second, Crazy pool in third. Last 60 days, Ether mine in first, Crazy pool in second, F2 pool in third. Last 30 days, ZET in first, Ether mine in second, Crazy pool in third. Last 21 days, ZET in first, Ether mine in second, Crazy pool in third. Last 14 days, ZET in first, Ether mine in second, Crazy pool in third. Last 7 days, ZET in first, Ether mine in second, Crux pool in third. Last 3 days, ZET in first, Ether mine in second, Crux pool in third. And for the last day, Crux pool in first, Nano pool in second, ZET in third. As far as ASIC profitability, I'm sure they're looking probably a little bit better today. Nope. KD6 is pretty bad, 21.88 a day compared to the prices you were paying for them, right? To be clear. Antminer L7, 21.23 a day after power. Scrolling down, KD5 at 13.90 a day. And then let's look at the S19 Pro like we do every day. It is up about $1 a day if you're mining Digibyte at $4.18 a day after power. Let's get into questions and answers. Remember, super chats are never required, always appreciated. First to be answered because they're highlighted. And we already have a $20 super chat from Twisted Blockchain that we're going to start the Q&A off of. So if you want your question answered in priority, use a super chat. The best thing for the YouTube algorithm to support the channel is using a super sticker. You can go down all the way down to the price of 99 cents or whatever it may be. It just boosts the algorithm. That's what I've been told. So I'm relaying that information to y'all, and it helps support the channel as far as getting the information out there to more and more people. Tagging at Son of a Tech will change the beginning of the message orange and highlight my name, making it easier for me to pick it out of chat. If you do not tag at Son of a Tech at the beginning of the message, because that is the easiest way for me to see it, I will probably not answer the question at all. If this chat's slow enough and blah, 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 I may pick it out. But that's a completely unguaranteed method. And even the ones that are highlighted orange, sometimes I don't get to all of those either. Okay, so that's the priority. Those are the rules. And we got extra time today, so we'll catch up for the Q&A that we missed out on yesterday because we had a ton of news to check out. So yesterday's live stream is probably the one you want to go watch if you want to get updated on everything, because there was just a ton of news. I think we went like an hour and 15 minutes just on news, and I think it has a lot of good information there. And there's some topics I want to expand upon too. So as far as the first super chat from Twisted Blockchain, thanks for the $20 super chat. He said, could you tell us about a hypothetical situation where Bitcoin could do the same thing Celsius coin did? Is this the big reason not your keys, not your crypto is so important to keep bringing up? So if you talk about, all right. So Celsius is a weird situation because you have a token built on another blockchain that is then powering the funding of a centralized service. Okay. It's not quite the same as like Bitcoin because yes, Bitcoin, first of all, is a completely separate chain. So it's not a token on Ethereum, right? We could have a discussion about wrapped Bitcoin backing other services. This would be probably advantageous to bring up for Terra Luna UST, because you could see swapping of like Terra and Luna when they gave up the Terra pairing or whatever, and they started backing it with Bitcoin. A lot of that Bitcoin they were doing that with was the wrapped Bitcoin initially, before they were swapping it out to real Bitcoin, using decentralized exchanges to take it out of there, right? But when we're talking about as far as the same thing happening between the two, no, not necessarily. The entire DeFi ecosystem is at risk just from or to depegging, all that sort of stuff, but it also does work itself out. And we can see this with ST, ETH, and Ethereum, right? Where you see essentially 80% of the liquidity being in ST, ETH, and only 20% of it being in Ethereum. The market is still able to, within DeFi, basically limit itself and be like, no, we don't have enough. We don't want that ST, ETH, right? There's only like 20% of the people in this liquidity pool that are willing to give you money for that ST, ETH, right? For that staked Ethereum crap. We don't want it, right? So as long as it maintains like within like that setting, it's okay. But what ends up happening, right, is when it gets poured into those centralized exchanges, and the centralized exchanges start manipulating it in multiple different ways. And the worst offenders, right, the worst way to, offend like decentralization in general, in my opinion, is over-the-counter trades, or what's known as OTC, where they get some sort of bailout, right? They have a ton of ST, ETH, right? Three Arrows Capital or whatever. And they're like, well, we can't go to the decentralized exchange because the market has told us they don't want our ST, ETH. They said, that's a bad investment. You guys fucked up. We don't want it anymore, right? Like, so we can't go there and swap any more out. So we need somebody else to bail us out. So we're going to start doing off-chain deals. We're going to say, hey, you give us this amount of cash or whatever, and then we'll send it to your ST, ETH wallet or whatever. We'll send it over there. In my opinion, that's the worst offenders as far as all of this goes. Can that happen with Bitcoin? No, I think it could happen with like a form of Bitcoin, like I talked about, like wrapped Bitcoin or something. Sure. If it's being utilized to back maybe like poor projects, we did kind of see something similar with Terra Luna, right? Because we saw them shift from backing it with their own token, right? The stable coin, to backing it with, or to trying to back it with Bitcoin. And in the process drove the price of Bitcoin down as well. In a very funky ways, but it didn't like collapse it, right? It didn't collapse it like Terra Luna. It didn't get weird liquidity problems, nothing like that, right? Hopefully that kind of pulls that into perspective, right? Now, when we're talking about not your keys, not your crypto, this is a multifaceted topic that I think obviously has many, I say obviously, to me, obviously has many important things to it, right? Moving pieces, right? So first of all, security, right? If you control the keys to your crypto and you've been good at securing your keys, making sure that you keep them like safe, in a safe, but you know, you're practicing proper internet safety. You're not getting hit with phishing emails and not leaving your wallet connected and all these sorts of little things. If you are being responsible with your keys, it is the most secure way to handle your cryptocurrency. Why is that? Well, if you're in a centralized exchange, essentially, and you do not have access to your keys, you are in a position where if that exchange gets hacked, your funds are at risk. Okay. So it goes back to individual sovereignty, and with that comes the responsibility, right? that argument can go into a plethora of other things that we would discuss in real life, as far as like the rights you have as an individual, not imposing onto other people, and then obviously securing your own wealth or whatever it may be, and that responsibility being on you. It's not really dissimilar, right? Like the same concept that like some people have had in the past would be like, you know, if you do purchase gold and you keep it at a bank, you still have to worry about the bank closing down or getting robbed, right? So from the security perspective, there's that, right? As far as like not your keys, not your crypto, it's more secure as long as you're being responsible. Okay. Then we can get into, of course, the fact of manipulation of the markets. Okay. So anytime you give your money to a centralized exchange, they are incentivized to make money with that exchange. Not dissimilar from the banks in traditional finance, right? So you take your money, you give it to a centralized service. That centralized service needs to then generate revenue off of your income, right? Or not off of your income, but off of your crypto. This basically means that as opposed to taking the risk yourself, you're putting off the risk onto a third party. Okay. We can go back to the principles of crypto and saying, you know, it's for peer-to-peer transactions without the interference of a third party. So already we've fucked up there. Okay. Already by putting it in there, we've fucked up the principle. But the reason that's important is because if somebody else is controlling those investments, right, you have no control over those investments. And therefore you risk them losing your money. So the exchange could lose your money, right? What happens when the exchange loses your money? Okay, so let's say like the exchanges start losing all of your cash. They're losing everybody's cash. We saw this with BlockFi. They've been losing money even through a bull market, right? They're not cash flow positive. They're cash flow negative. This is a problem. What ends up happening with these services, like we've seen with Celsius, etc., is that they start shutting off their services, right? So now you have no access because they messed up with your investment, and now you have no access to your funds. Hence, not your keys, not your crypto. If you controlled your keys, no problem. You got control of your funds, okay? Now, there are aspects of DeFi where you could have control of your funds and not be able to sell them, right? So ST ETH and ETH in the liquidity pools, 80% being ST ETH and 20% being ETH. You could be in a position where you're stuck in a bad position with those holdings of a wallet that you control the keys to, but at least you still have control to those. Then you could maybe do your own over the counter, I suppose, right? But these are all the problems that start like piling up. It's very simple to go back to the principles of Bitcoin, a peer-to-peer cashless system, right? Without the interference of a third party. So if you have the interference of a third party trading for you, doing whatever it is, then that's where you end up. Once again, like we talked about yesterday, ground yourself in those principles and follow them, whatever they may be, right? And then at that point, you'll be a lot more guarded within cryptocurrency. You'll be a lot better off. I want to say thanks for the $1.99 super sticker from Ted Park. Papa Lip for the $5 super chat says, hope you had a great Father's Day. Has the farm ventilation equipment arrived? No equipment yet, but there will be a video as soon as they do. Rock Guy says, ask Simon Tech, did you see the Zilliqa pump today? No, I did not. All right, so let's scroll up and get some more questions. Detroit Iris says, ask Simon Tech, does GetBlock show current live mining info? I can see hash at 4 gigahash, payments confirmed, but unconfirmed shows 0 after mining all morning. I think it's up to date. You could talk to them. I have some unconfirmed. They confirm pretty quick though. So I don't know. Miller Mining Company says, is Ergo still the good choice after EIP 27 hits tonight? We won't know until we see if there's price discovery. Is Beam worthwhile? Been around a long time, but no real movement in Beam, even through the bull run. So I don't know if it's really going to be any good. Dave Jack says, Asamatech, do you like... not going to answer that. Michael says, Asamatech, have a 6 GPU rig reliably running on Windows 10 NiceHash, would like to receive Bitcoin. Do you recommend switching to Hive? I always recommend utilizing Linux in general. You could do Hive, you could do SMOS, anything like that. For rig management, it's going to be easier. For security, it's going to be better most of the time, because you're not running on a system that may have compromised data on it. Also, if it's on your personal network, maybe split off a VLAN for just miners, that sort of stuff. Daniel Ring says, Asamatech 3060 is in a weird place. You can buy them for 400 new, but used is 350 to 400. We talked about that earlier in the show. This is going to become more common. We see Chinese miners starting to dump their GPUs onto the market. Tobias says, Asamatech, you mentioned that we should only trust pools that have incentive to keep miners. I didn't say only trust them. I said we should support pools that we should trust pools that support miners, I believe is what I said. But supports their coins in ETH. Crazy Pool only supports ETH. Oh, okay. So you're talking about, okay, so the concept we talked about before, where when we're getting close to you're talking about when we get close to the merge and that final payout from the pools. That's what people are worried about. Okay, so what people are worried about right now is that, and it wouldn't be a ton, really. It would be that last payment after the merge that people are worried about losing. And the idea is that you would trust a pool that would have some other incentives for other coins, because if they have other coins, then they're still going to be running their operation and they wouldn't want to mess or screw over the miners. And therefore they would go ahead and initialize that final payment post merge. Whereas a pool that basically has only been doing Ethereum, has no other coins on it, really doesn't have an incentive to keep miners on their platform, may just keep those final payouts. And that's really it. That's kind of how it ends there. Profection Game says, Asamatech, did you see USDD DPEG? No, I haven't seen that yet. By the way, can check. It's almost back to full peg. Guys, it's so hard to keep up. I'm trying to keep up with everything, I promise. USDD is it's almost back to peg, right? It's not terrible. I don't know what happened though, so I'd have to look at it and see why, right? Little depegs kind of happen on stable coins. Depends on the platform they're on, all that stuff, right? Bojangles, $2 super chat says, I have 3 gigahash on Neta, earned $2 a day, earned $2 all day yesterday. Was yesterday the only day you're mining? Remember, we're catching up on stuff. JJ Doc says, Asamatech, love your grind, dude. Where did you get the Fuck Banks t-shirt? That one came from this company, I believe. Yeah, BC Vault. I don't know. They sent it to me. It's a cool shirt, but I don't know if you can buy one on their website or not. I'll go look. BC Vault. They're like one of those companies that sent me stuff, but then don't have an affiliate link, and it's very weird. So I don't make any money from them, but the shirt's really cool. Shop. Let me see if they got it up here. No, oh, yeah, right here. Here's the link for that. We have a $2 super sticker from Luke. Thank you, Luke. A 99 super chat sticker from Don D6. Thank you, sir. A $2 super chat from Raja. Is it Raja Patel? Said, you're a good man. May Shiva bless you. Thanks. Speaking of, Shiba Inu was apparently going on trending on Twitter right before we started the show, but I didn't get a chance to figure it out. Unix Shady says, at son of a tech, I home mine with 1.2 gigahash a second in a moment. I'm kind of stuck in the situation where I don't know whether I should sell mine crypto and keep buying GPUs or keep the crypto. Well, in an ideal world where you're at right now is that you put yourself into a cash position during the bull run and you just pay for all that and then hold all the cryptocurrency. I fucked it up again. I didn't quite get there. We almost got there. But that would typically be how you would handle the halving cycle. A great person to look into would be Bitsby Trippin because he's survived multiple of these. So definitely check him out. I know he's done a couple live streams on this. Bert Thing says, as I'm a tech, no one tells you this enough. I just want to say thank you for the way you run your channel, not promoting projects like the other YouTubers. Lots of respect. Thank you, good sir. I try, but I make mistakes too. We're all going to make mistakes, man. It is what it is. And if I do, just call it out. I'll try to correct it. We may disagree though, depending on what it is, right? I think like there were some disagreements about like, I said that, I'm going to go ahead and buy some of the sell and participate in the short. And people are like, I'm not going to do that. And I respect that, I just figured that I would participate in it. It doesn't mean that I believe in sell, right? It's a short going on right now. So I was going to play around with it. Luke, for the $10 super chat, says, Ask Simon Tech, long time no talk. You ever in one-on-ones for percentage for crypto again? Helped me with the first 3090. Now I'm 4 gigahash. I appreciate you more than you'll ever know. I do one-on-ones. I think we're booked up for this week. And you can access the information on how to book out one-on-ones through the locals. So sonofatech.locals.com. And yes, that is a $5 a month premium service. And yes, I think $5 a month for access to one-on-ones is completely fair enough because, come on. I'm going to sit down for an hour for $5. I think that's fair. I think it's fair. I don't know. You let me know. But I got to kind of try to manage my time too because I'm making a ton of content as well. David, thanks for the $5 super chat, says, looking at expanding my electrical service at my house. Should I shoot for 3 by 20 amp circuits or 2 30 amp circuits with server PDUs? Personally, what I did in my house was 2 30 amp circuits with the L630P PDUs or whatever. That worked out very well in my home mining setup. It got me over 3 gigahash, pretty close to 4 gigahash over there. And then was it L630P? You do L630P plug, and then you do the 30 amp trip light PDU, which I'm getting you the link for right now. That's the basic 20 outlet, 30P, 30. Is this the 30 amp? Yeah, this is it right here. Oh, hold on. I can't get into it right now, but on Amazon, you're just looking for the Trip Light Basic PDU 30 amp 20 outlets. And then if you're in the home mining, you get 2 of those. You do 2 30 amp breakers, run them to a single L630P plug, and then you're good to go. Richard Sullivan says, can you do a quick explanation of what pegged and depegged means? So, all right. So if you have an asset, right, that is backed by another asset, pegged means that the asset that is representing the other asset is the same value. So if you have the US dollar, right, that is backing a stable coin like DAI or USDC or USDD, if the price of the stable coin, of the backed one goes below the value of $1, then you've depegged. If it maintains, then it stays pegged. A lot of this is going to be very relevant surrounding decentralized finance because a lot of it is built on tokens, right? So I've explained this before, but Bitcoin, you got Bitcoin, main chain, solid chain, right? Then you have wrapped Bitcoin on the Ethereum blockchain. That is a token representation of actual Bitcoin. If the price of the wrapped Bitcoin drops below or goes way above for whatever reason, but more than likely goes below the price of actual Bitcoin, then the wrapped asset of Bitcoin on Ethereum has depegged from the price of Bitcoin. Texas A says, Ask Simon Tech, is there another flux pool besides miner pool that pays out PAs, including unreleased PAs down the road? No, I am not aware of any. Danielle says, I subscribe to your locals page. Thank you, good sir. Welcome to the Suns on Locals. Aggie Land. Gig 'em. I have all NVIDIA cards from 1660 Super to 3090. What coin should I be mining, and is switching coins multiple times a day to max out profits something I should do or not? So, first question is what you should be mining is the most profitable, and then swap for what you believe in. That's the standard go at it. Of course, I am mining Ergo right now. It's not necessarily the most profitable. We could get into some of that stuff. To your second question, but okay, to the first question, just to complete that, I can't tell you what to mine. The markets are crazy right now. There would be no way for me to really be able to tell you. I can tell you what I mine. That's what I can do. As far as switching pools and coins. No, you don't want to do that because most of the pools run some sort of pool hopping mechanism where the longer you are on the pool, the better your rewards are going to be. When you hop off, you're penalized. Gary R., thanks for the $19.99 super chat, says thanks for your dedication. Thank you, sir. It is 11:02, so I am going to get going. I also feel like I need to go hit an oxygen bar or something. They got a little like allergies. I'm trying to get like deep breath. All right. Thanks everybody once again. Be sure to hit the like, comment, subscribe, notification bell. I'll see you guys next Tuesday.